Hey everyone, welcome back to Corporate Dakota. Today, BURL just filed its annual report, and this shows us a key vote from their shareholders on how the company is being run. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals investor sentiment on the board and future company direction, telling us a lot about what shareholders think is important. So what we have here is an 8K filing from Burlington Stores Incorporated. This is a report that companies have to file when there are big events happening that shareholders should know about. And in this case, it is about their annual meeting of stockholders that took place on May 1926. Essentially, this document tells us how the shareholders voted on important company matters. The main event at this annual meeting was the vote on a few key things. First up, shareholders got to vote on electing 7 members to the company's board of directors. These are the folks who oversee the company's strategy and management, so it is pretty important they have the backing of the shareholders. The filing breaks down exactly how many shares were voted for, against, abstained, or were broken non-votes for each director. Looking at the numbers for the directors, most of them got a very strong vote of confidence. For example, Ted English received over 57 million, for votes with only about 420,000 against. Shira Goodman and Laura Sen also saw very similar strong support. This kind of overwhelming support usually means the board is doing a decent job in the eyes of the investors. However, there is one director who stood out with a notable number of against votes. Jordan Hitch had a significant number of votes against him, around 6.9 million compared to roughly 51.4 million for votes. While still ultimately elected, this difference is definitely something to keep an eye on. It might suggest some shareholders have concerns about this particular director or their performance. The broker non-votes, which are shares held by brokers that were not voted on behalf of the customer, are consistent across all director votes, sitting at over 1.1 million each time. This is pretty standard. Next, the shareholders voted on ratifying the appointment of Deloitte and Touche LLP as the company's independent auditors for the upcoming fiscal year. This is basically a thumbs up or thumbs down on who is checking the company's financial books. The ratification of Deloitte and Touche LLP as auditors received a massive wave of approval. Over 57 million votes were in favor, with only about 2.1 million against. This strong consensus means shareholders are comfortable with Deloitte continuing to provide independent oversight of Burlington's financial reporting. There were also about 17,000 abstentions and no broker non-votes in this specific category. It shows a high degree of trust in the chosen accounting firm. Then came the say on pay vote. This is an advisory vote, meaning it is not binding, but it gives shareholders a chance to voice their opinion on how much the top executives are being paid. It is a way for shareholders to influence executive compensation. The results here show a mixed picture. While over 51 million votes were cast in favor of the executive compensation, a substantial 6.9 million votes were against it. This is a significant number of dissenting votes on executive pay. It suggests that while a majority still supports the current compensation structure, there is a meaningful portion of shareholders who feel it might be too high or not justified. About 72,000 shares abstained, and over 1.1 million were broken non-votes. This is a clear signal to the board and management that executive compensation is a point of concern for a notable segment of their investors. Finally, shareholders voted on how often they want to have these say on pay votes. They could choose between every 1, 2, or 3 years. The overwhelming winner here was the every 1 year option with nearly 57.9 million votes. This clearly indicates that shareholders want to review executive compensation annually. The every 3 years option received about 500,000 votes, and the every 2 years option got a very small number, just under 5,000 votes. This vote confirms Burlington's commitment to annual advisory votes on executive compensation for the foreseeable future, which is a pretty standard practice for publicly traded companies. Looking at these results, it is clear that while the board of directors and the company's auditors have strong shareholder backing, the executive compensation is a topic that still sparks debate among investors. The significant number of against votes on the say on pay proposal, coupled with the clear preference for annual votes, sends a strong message to the management team. It signals that they need to be mindful of how they structure and justify compensation packages going forward. The company's stock has seen some volatility recently, with a few headlines suggesting a drop in price despite strong earnings, but this shareholder meeting shows a robust approval for the board and audit firm, which are foundational elements to investor confidence. The risk I am watching is how management responds to the shareholder sentiment on compensation, as a continued disconnect could lead to further shareholder activism or dissatisfaction. What I'm actually looking for is how the compensation committee will adjust their approach in the next fiscal year. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this deep dive helpful, like and subscribe, and join our Discord community linked below.